All right, so let's do this. All right. Stock is 139-ish. What's the expected move here? What do we think? Okay. Yeah, it's about 12 bucks, which I know is right spot on with when I was on TD earlier, what we were talking about. And in fact, for those of you that were listening in earlier, I actually want to go through this one of the strategies that we talked about, this unbalanced put butterfly. I want to go through that to show you why that's typically not something that type of signal that we do here. Okay, yeah, this Friday, Jake, this Friday. So we're looking at this week's expiration. So about a $12 move. Let me get this up on the board here. Today is now the 5th, the 1-year anniversary of the big market debacle. You guys remember that last year? The day the Dow was down like 1,500 points, and then it rallied, and then it closed down. It was kind of the beginning of the big volatility in the marketplace. Do you guys remember that? It was 1 year ago today. In fact, I was in New York on set, both with Bloomberg and with Fox Business that day, in live on set with them in New York while this was going on. I will tell you that people were freaking out. All right, so the expected range then based off of this is 127 to 151. Well, Jules, we don't know if we're doing a butterfly. We don't know what we're doing yet. All right. So 127, 151. Let me bring this chart in here off of Thinkorswim. And you guys can tell me if we see any kind of pattern in here. Okay, so 127. Well, lo and behold, as we see very often, and it's usually not just coincidence, that's 50-day moving average. Okay, here. On the upside, the 151 area, what I see actually is more definitive to me of a resistance area than this particular 50-day moving average is on the support side. This is a really, really huge volume area. See the big yellow line coming out from the left here. Okay, when we see big volume, that's an indication of consolidation. The market likes that. That's like a magnet. Okay, if the stock happens to rally and gets up to here, there's going to be a lot of trade in this area. The reason in this instance why I don't think the 50-day moving average is as much of a support area as we typically see when we look at the 50 and the 200-day moving averages. A, the stock has only been around trading for 6 months. So there's not a ton of data. Okay. B, you can see for a good portion of time, for almost 5 months, this thing trended under the 50-day moving average. In fact, the 50-day moving average stood as some pretty decent resistance here. But now that it broke through, maybe that comes in as some support. But I wouldn't look at this as the gospel as we normally do. Okay, so let me put this on here. The 50-day moving average is right at 127, and huge volume resistance at 151 to 153. Okay. Yeah, again, Michael, that's a good indicator, but we don't have a lot of data here, right? Because it's a new stock. Options were only listed about 6 months ago. So we don't have a lot of data. So all of the technicals that we're looking at in this case, you kind of have to take them with a grain of salt. Okay. So the first thing we can absolutely look at is just an iron condor. And let's look at it based off of what the expected range is. So that 127 and 151. So let's say we look at this, and what are the strikes up here? I was afraid we're going to see a $2.50 wide, okay? But that's okay. So this iron condor is $3 wide on the downside and 2.5. Let's tighten this up to $2 wide on the downside. Okay. So the 129, 127, and 150, 152.5 iron condor is right around a buck. Yes, there's $2 on one side, 2.5 on the other. That's just because of the way the strikes are. I don't love this because our break even here is 128 and 151. Okay. It does put us right to the expected move on the upside, puts us a little short on the downside. But this for $1 does not give us great reward to risk. If both sides were only $2 wide, then we're talking a different story. Then we're getting that 1-to-1 odds. But because the upside is a $2.50 wide spread, it lowers our odds a bit. Okay. It's really not 1-to-1, Michael. It's less than 1-to-1 when you factor in what the odds are on the upside. Right? Again, if they were both $2 wide spreads, we'd be right at 1-to-1. But remember, it's $2.50 wide spread on the upside. Okay, so that is, that is, just the calculation here. Now, if we wanted to get a little bit more bullish and still do an iron condor, what we can do here is raise the strikes on the bottom. But even that, and I just raised the strikes by $2, only adds in an additional 5 or maybe 10 cents. I don't think that's worth it. I don't think that's worth it at all. So, to me, iron condor probably doesn't work, at least for the type of trade we're looking for here, for some upside exposure. Okay. So let's look at volatility. Let's look at a calendar. Okay, what is volatility doing here? Well, we know it's elevated in the front month, even though it's down a little bit today. And let's say we're looking 151 is the target. Let's go to 152.5 here. And what is volatility doing next week? Actually, there are no 152.5 strikes. Okay, so we might have to go out. No 152.5 strikes at all. So we would have to go up to 155. Let's see if it makes sense to do that. Okay, what is vol doing next week? We should probably lower vol quite a bit, obviously. I probably lowered it way too much for our liking, but I don't want, there's not a lot of history here. I don't want to get stuck long volatility that may collapse. Okay, this is what this calendar looks like, and this is with me taking just a ton out of implied vol. It's actually not so bad. This is not that bad. This is probably a 60 to 65 cent calendar spread, and you can see what potential upside is. I don't love it, though. I really don't love it. I've seen much better reward to risk opportunities. Now, one thing we could do, if we're bullish and still want to be careful with volatility, is we can make this into a diagonal. So now this is a $2.50 wide calendar. We can see that the cost of this probably now is about $1.35 or $1.40. And this is what that looks like. I don't really love the reward to risk on this either, because in a diagonal, I want to see better than 1-to-1, on a calendar. This is really just about at 1-to-1. If I'm paying $1.30 or $1.35, and we're looking right for this move here to to 151 or so, that just gives me 1-to-1 reward to risk. I don't love that. Everybody see what I'm talking about? Okay, so, and I'm just putting these notes on here, what we're finding. So if we still want to play the upside, what else does that leave us here? Okay, what else can we look at? Yep, just a spread. How about a plain old simple call spread or a well, no, we don't have to look at another stock yet. We're not going to try and fit a square peg in a round hole and try and find something that doesn't make sense, but we have not exhausted all of the potential here, all the possibilities yet. So yeah, let's just look at a straight, simple upside call spread and maybe a broken wing butterfly. Okay, so going back to our whiteboard here with the expected move or expected range being up to 151, that ideally would be the range that we would want our short strike. There is no 151 strike, so we either have to choose the 152 half as our short or the 150. Okay, what if we look at, let's say, a 146, 150 call spread? Okay, not horrendous. Okay, not horrendous here. So the 146, 150 call spread, right now it's trading, let's say, $1.10. Okay, the reward to risk on that is 290 divided by 110. Okay, which is not bad. It's 2.64 to 1. We'd like to see a little bit more than that, but it's not bad. Okay, but now what if we were able to get that for $1? First off, what would have to happen in the stock for us to get this for $1? And then if we were, what would we be able to potentially do here? Or what would the reward to risk be if we were able to get that for $1? Exactly. By about how much? Given where it's trading right now. Well, the delta of this spread is about 10. I mean, it's showing 9 here, but it's about 10. So that means that the value of the spread is going to change by 10 cents for every dollar the stock moves. If stock goes down $1, we should pick up that 10 cents and maybe be able to buy this for $1. Okay? Or if we want to get in something here, let's see what else is available to us. What about the 145, 149, 150 broken wing fly? Now we're talking. Now we're talking. No, just a $1 move, Rob. A $1 move down would adjust the price of that spread by about 10 cents. This, to me, has the right reward to risk on it. The 145, 149, 150 broken wing fly, if we could get that for $1, that to me is the winner chicken dinner. Okay, everybody see that? That's the signal I'm going to put out there. Any questions from anybody? Why what, Robert? Well, if I pay $1 for this, what is the max value that this broken wing fly can be? What is the max value? Anyone? Not just Robert. Anyone? What's the max value this thing could be? Can be worth $4. Okay, yeah. Minus the short could be worth $3, but the max value is $4. If we pay $1, that means our reward could be 3. Our risk of 1 gives us Oh man, I was going to draw that in there, but that's not a good drawing tool. Gives us 3-to-1 reward to risk. Really what we want to see in a directional play for earnings. So again, if we like an upside move here, from everything that we've evaluated, this gives us the best reward to risk within the confines, within the parameters of what the expected move is. And any other questions? And Robert, does that help? What do you mean? What do you mean you don't see a 149, Russell? There are 149 calls. Well, Robert, what I'll do is I'll go through on an Excel spreadsheet. We'll do the P&L for you. Okay. All right. So everybody understand this? I want to get that signal out there. And then as a continuation on this, I also want to do that spreadsheet with the P&L. And I also want to go through the scenario that we talked about on TD, the unbalanced put fly to the downside, which certainly is a viable strategy, but something that for our room I am not comfortable with. And I'll show you why. Okay. All right, let me get this posted in the room. I'll get the signal out there, and I'll be back.